Welcome back to Making Money Matter, ladies and gentlemen, bringing you yet another fantastic conversation from the Rule Investment Symposium here in Boca Raton, Florida. And guess who I managed to grab on the final day of this fabulous event that I've been at, which I want all of you to come to next year, and it is the wonderful Mr. Rick Rule himself. He is the founder of this great conference, and although it's very hot outside, it's pretty cool in here. There's a few hot deals around as well, and lots of great speakers. We're on day 4. I think you've still got your voice.
Loud and clear.
It's loud and clear. You know, you have been on the stage, you've been on the floor, you've been talking to everybody. You make yourself so available. How's the show been for you as Rick Rule this year?
I measure the show by how other people tell me the show has worked for them. And there's been a tremendous outpouring of support, both from the attendees who are live here and from some portion of the 1,000 attendees who we have live stream around the world. We had the good fortune last night to take the exhibitors out on a boat cruise, as well as some of the other people, yourself included. It's kind of tough to screw up an event where you take people out on a boat and you have an open bar. But suffice it to say that satisfaction with regards to that feature was high as well.
Yes, well, it was a lot of fun. Look, Rick, a couple of things that I want to ask you. Why did you start this symposium in the first place? And because I believe you handpick who is here, and there's a few Aussie companies here. Meteoric is here, Centaurus is here, and I've noticed a few more Australians here this year, maybe because we've done a few shout outs on here, but it's good to see the Aussies here.
I suspect the responsibility for the Australian attendance is yours, for which I thank you. In terms of the selection, it is our aspiration over time to have this as a showcase for best-in-class companies, irrespective of the country of their domicile. And I've been a beneficiary of the Australian mining industry going all the way back to investing with Robert de Crespigny in the late 70s. So I've been in and about Australia for a very, very long time. I was, I think, probably one of the very first foreigners at Diggers and Dealers, where I learned all about Australian culture.
Well, that wouldn't have taken very long.
No, we're delighted to have the listings from Australia. As to the original question, honestly, I benefited a lot in my 20s from having spectacular mentors. Peter Cundall, of course, my principal mentor. Many, many, many people taught me an awful lot, saved me from making an awful lot of mistakes. Couldn't save me from all of them. But I feel an obligation, frankly, to pass on some of the lessons I learned. That isn't to say it's entirely altruistic. This is a for-profit organization. I'm hoping at some point in time that my staff buy it from me. The investor education mission is important to me.
Yes. Yeah. And it's important to me as well. I think that investor education is key. And speaking of investor education, we have a beautiful audience out there of people, mainly investors, that are looking for a little bit of guidance. So where do you see us as I talk to you now in July of 2024? What's on Rick Rule's radar going forward? I mean, I know that you are a contrarian investor, and I know that you picked the uranium market and told people all about that well in advance. What's your view as we go into the second half of 2024?
Well, in the very near term, which is to say the next 12 months, I suspect if I had overemphasized one sector over another, it would be the development stage gold miners. I believe that although it may not happen in a year, that we are in the early stages of a real gold bull market as a consequence of what I see as incipient global inflation. When people look at the increase in the gold price without the concomitant increase in the share price of the gold equities, some people are scratching their head. And to me, there's an easy answer. The buyers of the gold have been central banks, and they don't buy stock.
Right.
We haven't seen a ubiquitous market because there's been no natural constituency for the gold shares. I believe that, at least on a selective basis, the gold shares are going to begin to bridge the gap with gold, and I believe the gold's going to keep going too. So if I had to overemphasize a sector for the next 12 months, it would likely be gold. Hardly a contrarian bet. But there's nothing as obvious as uranium was. There's nothing that enjoys, if that's the right phrase, the hate that the uranium market had in late 2021, early 2022, when you and I were talking about our new show.
Yeah. Well, I think there's a lack of understanding of gold versus gold equities. I think there's a lack of understanding from, I mean, there are investors out there, clearly. We run the Australian Gold Conference, and you run this event here,
Right.
where there's some gold companies here as well. But I think there's a majority of people who are investing in, I don't know, Nvidia or the the big seven that have no clue about gold. But there are some great opportunities. What is important? Is it important for you to look at management, jurisdiction? Because we're talking gold now specifically. What's important to you when you're looking at companies?
I'm maybe more agnostic about jurisdiction than most.
Okay.
I think you know me well enough to know by now, Carrie, that I don't believe there's such a thing as a good jurisdiction.
Yeah.
There's only less bad ones.
Yeah.
I mean, certainly in terms of the history of social support, WA is a good jurisdiction. Unfortunately, people in Western Australia vote. Sometimes the people they vote for are less good than the people who vote them in. I'll leave that after that.
Yeah.
In the earlier stage gold companies, it's all about management.
Right.
It's all about management. It seems that good people always end up with good rocks. So the people really matter. After that, when it becomes development stage, interestingly, there's all these wonderful documents available in the public domain, and people, for whatever reason, don't seem to read them.
Right.
There's wonderful disclosure if you do the work. Wonderful disclosure in Australia, wonderful disclosure in Canada. These feasibility studies are never right, but they're closer.
They're a good indicator.
They're closer than you can get any other way.
Yeah.
And the fact is that they're public filings. All you have to do is read them. When you read them, it's of course important to make apples to apples comparisons. As an example, different companies can use different gold prices in their
Exactly.
assumptions. So
Yes.
you have to equalize that.
Right.
Some people rate before tax, which is pretty stupid because you don't get to enjoy before tax cash flows. Some people use a 5% discount rate, other people use a 10% discount rate. So that when you read the document, you have to normalize the assumptions across the documents. But the truth is, there's wonderful information in these documents. And mercifully for me, many of my competitors, particularly the younger ones, don't seem to read them.
Is that what you think the issue is, that people just do not read?
Yeah.
They don't look the number. They probably don't know how to dissect the numbers.
Well, it's not really that difficult to dissect. If you normalize the assumptions and you look.
What do you mean by if you normalize the assumptions?
If one company in their feasibility study is using $2,000 US gold,
Yes.
and a different company is using 1,750 US gold, it makes perfect sense that the outcome would be different.
Yep.
If one company is using a 5% discount rate and a different company is using a 10% discount
Yeah,
rate,
those
of
are the
course.
simple bits. What
Yeah.
are the more complex ones that people
The more complex ones, the ones that usually begin to require a little bit more rate, is, as an example, power price assumption. When you're looking at a power price assumption, there are usually people who you can consult who can tell you if the prices that they're quoting are normalized prices.
Yeah, because I wouldn't know, for example, if we've got a gold company in, let's just take Brazil, for example. I don't know what the power prices are over there. So if I'm reading that they've got a power price of X, I would
But
assume that it was right.
you would have the ability with one phone call to raise your friends at Meteoric and say, who can I
That's
talk
true.
to about power prices in Brazil? I don't know all the answers to this thing, but I do know if I have a question that usually within 4 or 5 phone calls I can answer it.
Okay.
I'm competing with people who never bother to ask themselves the question.
Right. Right.
It's likely that I will get closer to the answer than they will because they won't ask the question to begin with.
Because it is, at the end of the day, it's either economic or uneconomic. So
Correct.
you have to do the numbers.
Correct.
Because, I think you've mentioned this in the past, that not all of them are going to become a mine.
Right.
But is it important as an investor to look at it that way, or does it not matter in the early stages? Because I'm talking now exploration, because there can be a nice I guess, leverage in the explorers.
Well, that's different. There's a bit less documentation.
There's a lot less documentation.
There's a bit more magic.
Yeah.
And in terms of exploration, you need to, as an investor, begin to develop a knowledge yourself as to who possesses real specific knowledge and who you can relate to. An example would be, if I'm looking at a deposit that is an epithermal gold deposit or a porphyry copper deposit, some deposit that's on accreted terrain, tertiary volcanics, less than
Okay.
25 million years old.
Oh,
I
okay.
know that Brent Cook
Yes.
has encyclopedic knowledge of tertiary volcanics, that kind of terrain. I've been on enough field trips with him to know that while I'm busy looking at maps and charts, he has binoculars and he's looking at the surroundings. He has the ability to interpret the rocks he's seeing of that age.
Wow.
I know other people that, while they don't have that ability in tertiary volcanics, they have that ability in Archean terrains, in the Australian greenstone belts or in northern Canada. So you develop as an investor over time, if you survive, a knowledge of who knows.
Right.
You don't have the knowledge yourself, but you begin to develop a knowledge of who knows. And it's important that as a consumer of expertise, that you learn to segregate by specific experience. Brent and tertiary volcanics, as an example.
Okay.
Somebody else in Archean or Precambrian
Right.
terrain, somebody else in orogenic gold deposits.
Wow, okay.
Coming of age as a mining investor, which takes a decade usually,
Yep.
involves
I'm not there yet.
it involves developing a knowledge of who knows.
So actually reaching out and making those phone calls and not just looking at paper is equally important, is it?
Yeah, it's critically important.
Critically important.
I've
Okay.
been doing this now for almost 50 years. I just had the good fortune to host a lunch for the living legends.
Oh, and there was an Aussie in the Living Legends. Craig Parry, big shout out to you, Inventor
True.
Capital. Great guy.
And one of the things I was able to do is listen, ask
Right.
questions, listen, write down the answers, and now I know a few things. If I have a question about something specific, if I don't know the answer, I could call Craig or I could call Sean Boyd from Agnico, and if they wouldn't know the answer, they might know who knew.
Wow. Wow. I think that's right. But going back to my audience,
Right.
they don't have those sorts of connections.
But
they don't know who to pick the phone up to.
Carrie, this is wrong.
Oh, okay.
This is wrong. People have said for years, Rick, that's stupid. You can call the CEO of the company.
Uh-huh.
Before I did this conference, we have 50 public company exhibitors.
Yep.
I interviewed every single exhibitor, and we made tapes before this conference so that our attendees could ask the exhibitors. And as a test, at the end of every single interview, I said to my exhibitors, and these were all CEO interviews, if anybody in my audience is interested in learning more about the company, who in particular could they call? And in something like 45 out of 52, they said, me.
Wow, that's
Call me.
great.
I'm the CEO. If a CEO of a small company won't take your phone call, he or she is telling you something important.
Right.
They're telling you that they think that they're too important to be involved in capital acquisition, which is to say they're destined to be a failure.
Right. It's interesting because I think people get a little bit worried about picking the phone up. So here's something really important for all of you out there to know. You can pick up the phone to these MDs and CEOs. As Rick just said, this is the way you're going to start to learn and to understand. You're not going to have to try and figure it all out yourself, but ask good questions. Speaking of which,
yes, ma'am.
What are some good questions that they should be asking?
Well, I have always found that the best leading question, let's say meteoric,
Okay.
looking in decomposed volcanics in Brazil for rare earths. I say to the CEO, why should I care about your answers to the subsequent questions? What do you know about the task at hand? What did you do in your past that allows me to think that you're qualified to do the task at hand? And by the way, who is the rest of your team and what qualifications do they have? How were they chosen? Were they chosen because they were mates of yours? Were they chosen because nobody else was dumb enough to do the job? Explain to me what you know, how you know it, why I should care, and how you chose your team. That's where I always start.
That's where you start.
Mhm.
Okay, so that's an important one.
Mm-hmm. Then what I like to say is, okay, so your market cap is $200 million or whatever the number is.
Mm-hmm.
That's the price. what's your company worth?
Well, they're going to say multiples of that. I mean,
So then I ask them to demonstrate it. How
Right.
do you say that? Now, if they say to me, well, I'm XYZ company, which is also in this business, has a market cap of 500 million. I say, well, how do I know that that isn't 500 million too much? If you went to sell this deposit on the street to an industry partner, not hoodwink widows and orphans in the stock market, what is the deposit actually worth? What I'm trying to do is get to the discrepancy between price and value, if there is any.
Right.
Then I like to say, okay, that's what it's worth today. You're going to tell me that rather than selling it today, you're going to add value. Tell me how you're going to add value specifically. You add value by answering unanswered questions around your investment thesis. What's your most important unanswered question? And how did you develop that question? Did you develop it because it's convenient for you? Or did you develop that question because of ground truths? What happens probably 80% of the time that I ask that question is whoever I'm asking the question of says, I've never thought of it that way.
Wow.
Which is a different way of saying that they have failed to plan. And that's very useful because after that, I politely stop talking to them.
Right.
I throw it away and I divert my attention to a place I think I might be able to make some money.
Have you ever deployed some capital into a company where you haven't had all of the answers to those sorts of questions?
Yeah, I mean, certainly. And the other thing I do in my questioning is I say, listen, my grandfather told me once, if I can't think of 3 things wrong with my investment thesis, I don't know enough to make the investment. So tell me the 3 things that keep you awake at night and tell me what you're doing to alleviate it. What you find, and shameless plug for myself, if you go to the Rule Classroom, you'll find a 1-hour-long video on interrogating junior mining companies.
Yes, that's right.
And what happens is that if you do that, you will always find something wrong. You will always find something wrong. What you want is the preponderance of evidence. You will find that, this sounds like alliteration, but you will find that the quest for perfection is a form of procrastination.
A good point. And actually, just not procrastinating now, but Rick just mentioned the Rule Classroom. You guys, this is a resource that Rick Rule has put together with some partners that brings you such valuable educational experiences. Give us some other examples of what's on in the Rule Classroom, because this is a free resource.
There's 200 hours, plus or minus,
Amazing,
of educational programming, including several how-to discussions.
right?
Not all by myself. Geology 101 by Andy Jackson, a fantastic geologist that talks about the rudiments of various styles of geology, Archean geology, mesothermal gold deposits, stuff like that. Wonderful. When you're trying to go about learning how to interpret press releases, there's an upcoming interview. It isn't posted yet, by myself and Brent Cook.
Yes.
Entirely about interpreting press releases.
Fantastic.
Which I think will be useful. There's a lot of stuff there, and there's more getting added every month. Ultimately, what will be there is 60 1.5-hour-long segments covering everything I can think of to teach about how to analyze mining and oil and gas investments.
Mining
and oil
and gas. That's fantastic. Now, a minute ago you said 3, I think you said, you used the number 3. So I'm going to ask you to wrap this up and give our beautiful audience out there 3 things you think that they should be doing in order to become better investors.
Well, the first is, of course, invest in yourself. Before you invest your money, invest in yourself. Do the work. Specifically, I don't think that the number of speculative companies in anybody's short portfolio should exceed the number of hours per month they spend studying those companies. And when I say studying, I don't mean listening to Rick Rule or Carrie Stevens' podcasts, although you should do that too. What you should do is you should read the quarterlies, the balance sheet, the income statement. You should read the proxies. If you are willing to work 10 hours a month, then you should have 10 stocks in your portfolio. If you're willing to work 25 hours a month, actually, not pretend, actually, than 25 stocks. But too often I see these laundry lists of stocks that people own, and they don't know anything about them, which is silly.
Okay.
So that would certainly be the first.
That's a very, very good one to start with.
The second is to understand that people shop for stocks very stupidly compared to the way they shop for groceries or clothes. A different definition of a bear market is a sale.
Oh yes, of course.
Carrie, if you were going out to buy a winter coat and you had the opportunity to buy the same winter coat that was quoted at one place for, at $400, another place for $200, you would certainly shop the bear market. I mean, the sale. People who determine for their own purposes that a stock is worth $4, if they've done the work and they see it later on sale for $2, for some reason they're chagrined.
Yeah, I know.
That it's cheaper.
Yeah.
You need to think exactly the opposite. Warren Buffett has said two wonderful things about that. The first is that you shouldn't buy a share in a company where, if you had the money, you wouldn't be willing to buy every share on issue for the same price.
Yep.
The second is maybe more topical to what we do. He said, until you know enough about a company that you would be delighted to see the stock price fall by 30% the week after you bought it, so you could buy more money with the same expenditure of intellectual effort, you don't know enough to buy the stock. Now, sadly, Carrie, I've been testing that thesis dozens of times in my career.
Especially lately.
But in truth, it's worked for me.
Yep.
The third is related to the second, which is to say that volatility is not a risk. It's a tool. To the extent that shares rise and fall frequently in price, if you have an opinion as to value, the volatility becomes a tool.
Or a friend.
Correct. For many people, because they don't have any certainty themselves with regards to price expectation, which is to say they don't know why they bought it, they don't have the confidence to buy more if it declines in price.
They just get frightened.
And the other thing that people do, and this is actually inexplicable to me, this is a mistake I've never made. Because people viscerally enjoy the fact that share prices have gone up, often when somebody has the right thesis, they buy a stock at $2 and it goes to $4. Without knowing what it's worth, they think the fact that it went from 2 to 4 makes it twice as valuable.
Right.
In fact, if the thesis hasn't changed, it makes it twice as expensive.
Yeah.
So having an opinion as to value will give you some knowledge as to when you sold or when to sell. I'm not suggesting that you sell too soon. What I'm suggesting is that when you look at price moves, you try and assess yourself whether there's been an increase in value or just in price. If the answer is the latter, despite the fact that you feel good about the fact that the stock has gone from $2 to $4, you should sell some.
Yeah. And I think people find it very hard to sell. That emotional attachment comes in.
It's odd that when people care about a narrative, they require price action to justify the narrative, even though the price action sometimes devalues the narrative. If you'll remember the discussions that you had in early 2022, when the uranium price was at $20 a pound, you and I talked a lot about uranium and didn't get very much interest. When the price of uranium went to $100 a pound, which is to say when that information was 20% as valuable because of the price escalation, people were fascinated by uranium. The price action proved the narrative, but the price action devalued the narrative. The narrative was important when nobody else cared and stuff was cheap. The narrative became much less expensive when it had become reflected in the market. But human nature, I guess, requires the price validation around the narrative.
That leads me very nicely into my very final question, because I wanted to finish on gold, because of course we've got the Australian Gold Conference coming up, 26th to the 28th of August. Make sure you go to goldevents.com.au and register. Rick, a lot of people are saying that the gold price is very high at the moment and they're expecting a pullback. And quite often it's not about the price, it's about the opportunity. Your thoughts on where we are at the moment?
I hope that the gold price is expensive. I hope. In my lifetime, gold has responded well to periods of uncertainty around the maintenance of purchasing power in fiat-denominated instruments. So I hope the fears that I have are ill-founded. When I look in my own country at our politics,
If you could call it that, yes.
yeah, when I look at debt and deficits,
Mm.
when I look at quantitative easing, when I look at the juxtaposition between the interest rate paid on the US 10-year Treasury and the diminishment of purchasing power of the US dollar, sadly, I'm attracted to gold. I think I told you in an interview a couple of months ago, Carrie, I don't own gold because I think it might go from 2,400 US to 27. I own gold because I'm afraid it'll go to $7,000 or $8,000 or $10,000.
Mm.
Gold is also, gold and gold stocks, extremely under-owned in a historical sense.
Right.
We talked today in this conference about the fact that precious metals and precious metals denominated securities constitute less than 1/2 of total savings and investment assets in the United States.
1/2
of 1%. That's down from a 4-decade mean of 2%. So if precious metals and precious metals related assets only reverted to mean in the face of $120 trillion in on and off balance sheet liabilities of the US government, if they only reverted to mean, then demand for the stuff quadruples.
Absolutely.
And I think, unfortunately, that that's precisely what's going to happen.
All right. Well, it's been an absolute pleasure to have you on the program today, Rick Rawl, and also so nice to see you in person rather than across the water down the Zoom lens. So thank you so much for joining me on Making Money Matter.
A pleasure, and thank you for taking the flight. It's been a delight having you.
Thank you so much.